Well, good morning, everyone. My name is Karen Young, and I'm chair of the Advisory Council of the Program on Economics and Energy at the Middle East Institute. I'm also a senior research scholar at Columbia University in the Center on Global Energy Policy. I want to welcome you to this 12th session of MEI's virtual briefing series, which we're going to focus on the security of the Eastern Mediterranean and its gas markets and export there. And talk a little bit about how international markets and the region is reacting to the current tensions in the Middle East. Since the outbreak of the war in Gaza in October, MEI has been providing these briefing series. I'm delighted to welcome two energy experts on our call. We have Colby Connelly, who is one of MEI's non-resident scholars in the program on economics and energy, and in his full-time role, he's a senior analyst at Energy Intelligence. And we also have Dr. Greg Brew, who's an energy analyst at Eurasia Group. And he was kindly recommended to us from Rad Al-Qadiri, who's a member of our advisory council in the program. So thank you both so much for joining today and for taking the time. We'll get to a question and answer portion of today's briefing. All of you joining us can indicate that you'd like to ask a question using the raise hand function in Zoom, or you can write your question in the chat in the Q&A. I'll call on you. Please state your name and affiliation and direct your question to one or both of our analysts on the call. Before we get to that, I want to go to Colby and Greg. There are a number of concerns in gas markets right now, not just in the Eastern Mediterranean, but in transit globally, particularly through the Red Sea corridor. We saw Qatar stopping and then resuming yesterday its transit through the Red Sea. It looks like, though, that's maybe an empty tanker going south and some full tankers kind of waiting at the gates of the Bab el-Mandeb to go north. That, however, we have not really seen a spike in international prices. We've got plenty of supply. We've got a lot in storage. Europe has been warm. So maybe the risk is somewhat masked by some of these structural issues. In Israel, early after the October 7th Hamas attack, we did see a cessation of production in the Tamar field, but then relatively quickly resumed about a month later. We also have some movement now from the Ministry of Energy in Israel with plans for some expansion in the gas fields in the Eastern Med. Questions about what can be exported in terms of proportion of Israel's gas. There are domestic concerns, energy security concerns, where the lion's share is meant for domestic use. Questions about Egypt and Blue Ocean as an off-taker of Israeli gas. How much more might be able to go? And then structurally and infrastructure, how to get it there. There are a number of projects underway in terms of pipelines, questions about the feasibility of floating LNG terminals off the coast of Israel, and where those pipelines might go. Relationships with Egypt, with Cyprus, with Turkey, especially sensitive after the war in Gaza has begun. Israel also has a new energy minister. And so this is perhaps a political question, how that leadership might be changing and the views there. So let's go to both of you. I would love to hear maybe 4 to 6 minutes of opening remarks, your outlook for sort of the risk scenario, investor sentiment, whatever you are kind of projecting forward, both in terms of the market for this product and its expansion and potential, and lots of regional investors interested, of course, in this area as well. So maybe we should start with Greg, and then we'll go to Colby. And those of you listening, please get your comments and questions ready. Thank you.
Well, thank you so much, Karen, and thank you all for joining us this morning. As Karen mentioned, I'm going to try to keep my comments here relatively brief so that we can get to both Colby's comments and the Q&A. I want to start with a couple of macro points before I zoom in on the Eastern Med situation, which, as Karen mentioned, is closely connected to the unfolding crisis in Gaza and the regional crisis in the Middle East. Something that I want to emphasize first is sort of a macro development over the last couple of years, which I think, all of us in the energy community are very conscious of, but I think is still sort of coming into the public consciousness. is the development of a global gas market. And this is fairly new. This is fairly historic. Historically speaking, gas as an energy commodity has been focused on regional markets, right? You determine a suitable deposit of gas, you find a market for it, you build a pipeline, there you go. With the development of liquefied natural gas, LNG, and the construction of an incredibly expensive but now very present LNG infrastructure worldwide, we've seen the growth of a global gas market. Gas produced in one area of the world and shipped thousands of miles elsewhere, connecting gas producers in North America to gas consumers in Europe or Asia or elsewhere. And that has come with benefits, right? If you're a gas producer or a gas consumer, now it's much easier or can be easier to get hold of the gas that you need. But it has also come with downsides, the risks of disruption. We've seen repeated geopolitical disruptions to the new emerging LNG market. The most notable being the crisis in Ukraine, which was far more destabilizing, I would argue, to gas markets than it was ultimately to oil markets. And now this new crisis in the Middle East, which is almost certainly going to affect gas exploration and development in the Eastern Mediterranean. And a larger macro point that I want to make here is, like, as we see a global gas market emerge, or a market that is interconnected both regionally and on a global scale, we're going to see the gas market, in fact, we already are seeing the gas market move in a somewhat similar way as the oil market, right? Geopolitical risk emerging in one part of the world can affect gas prices in another part of the world, thanks to the movement of gas through LNG infrastructure. This is a relatively recent phenomenon. It's one that's going to continue to develop as LNG infrastructure expands, as gas becomes increasingly important to the energy infrastructure, both in the developed world, but also in emerging markets. So that's one big sort of macro point that I wanted to make. The second macro point that I wanted to make is, where is gas going as a global commodity? Where could the Eastern Mediterranean fit in the gas economy of the next 10, 20, 30 years? And this is maybe a more open question than it was even a couple of years ago. Gas consumption is going to be, in fact, has already been affected by the energy transition in Europe and elsewhere. We're seeing a dramatic increase in the use of renewable power sources, solar, wind, and that is going to cut into gas consumption. There is an increasing concern in Europe, particularly, about the volatility of gas supply stemming from the crisis in Ukraine, but also, I think, stemming from the current crisis that we're seeing in the Middle East. There is a concern that if you're shipping gas from thousands of miles away, the way that you ship oil, that is increasing your vulnerability to energy security disruption. That's increasing the risk that you may experience disruptions in your energy supply. And that might not be great for LNG, for gas in general, as we proceed over the next few decades, as the energy economy undergoes transition. So those are two big macro points that I think are going to affect the development of gas in the Eastern Mediterranean. Finally, a slightly more specific point: Eastern Med gas will have to compete in a global market, and it's got some stiff competition. I would point specifically at North America, the United States. The shale revolution is now, in its second decade. The United States is shipping more gas than it ever has before. It's supplying markets in Europe and elsewhere in a way that it never has before. And it's a safe source for consumers. You're not moving gas through strategic waterways like the Red Sea or the Strait of Hormuz. North America is a safe source of supply, at least relative to other sources of supply. So Eastern Mediterranean gas is going to have to compete with some pretty stiff competition now that it also has the looming geopolitical risk that comes from the crisis in the Middle East. So those are just a couple of points to make right off the top. I wanted to keep them fairly short, and I'll pass things back to Karen and hear from Colby. Thank you so much.
Thank you, Greg. That's terrific. And thank you for giving us that macro overview. I think that's very helpful. Colby, over to you.
Sure. Thanks, Karen. Morning, everybody. Pleasure to be speaking with you all today. So thanks for joining us, and my thanks to MEI for inviting me to contribute to the discussion. I have to apologize in advance at the risk of TMI. I had a very small sinus operation at the end of last week, so I know I sound exceptionally nasal today, and I do apologize for that. I'll just start by saying that, since 2022 and this major gas market disruption that Greg was just talking about, there's been a lot of optimism around the East Med, as the idea of this sort of very, very readily available source of gas supply that's kind of on Europe's doorstep. And I want to start out by maybe giving a potentially alternate framing for that, depending on what your perspective may already be, as someone who's been tracking developments in this region for several years, and certainly before a lot of the hype that emerged around the Russia-Ukraine war in 2022. What I'd like to move away from is the perception that the East Med as a region is this sort of especially promising gas province that is just now facing a lot of uncertainty due to a widening conflict around the region. Instead, what I would suggest is that this was a region that, yes, had a strong resource base, had some very positive developments in the last several years, and in theory, had a lot of potential and perhaps still does, but is a region that has also really struggled for many years to overcome a very long list of both political and commercial obstacles to the type of integration into this global gas market that Greg was talking about. Because as things stand, the East Med is sort of minimally integrated into the global market. And it's just now, yes, the risks around the region are certainly exacerbated by this war. But I'd also argue that the security risks that we're seeing now were already present and don't present fundamentally new operating risks for the region. Karen mentioned that the Tamar platform was shut down at the outset of the war. And although this was a much longer shutdown, even that wasn't without precedent. It was shut down for over a week during another flare-up that took place during the summer of 2021. But to the point I was making earlier about a lot of the other obstacles that this region faces, and some of them Karen mentioned earlier, a lot of this revolves around Israeli upstream growth and the ability to export gas out of the region beyond this regional market that's sort of been set up between Israel, Egypt, and Jordan. Israeli output is likely to surpass 3 billion cubic feet a day this year and potentially come close to 4 by 2025. But beyond using underutilized Egyptian LNG capacity as an export pathway, which comes with a host of its own risks, a solid export option really has yet to materialize. Egypt's gas markets have really been mismanaged to the point that Israeli gas flows are actually sort of what's keeping the lights on in Egypt right now, while at the same time kind of dimming the idea that those underutilized plants I mentioned at Idku and Damietta are really likely to serve as major export centers and help Egypt realize these sort of gas hub ambitions that it's had for a number of years. This is something that is certainly a very steep obstacle to that type of competition within the wider global market that Greg had just mentioned. Israel did successfully complete its fourth offshore bid round. ENI and SOCAR of Azerbaijan were awarded a number of licenses, but the political toll of the conflict kind of was made visible by the fact that this potential entry by the Abu Dhabi National Oil Company, or ADNOC, was derailed. But in maybe sort of a microcosm of the dynamic that I'm trying to present here, the commercial terms of that deal, which involved a partnership with BP to acquire half of Israel's NewMed Energy, was really already on the rocks due to some commercial issues that were there prior to the war. I don't want to overplay the extent to which the war is impacting the gas sector, because while there have been some security threats, we really haven't seen the gas sector, either primarily in Israel but also in Egypt, emerge as anyone's primary target. Yes, we had the shutdown of the Tamar platform, but it's back up operating now. There were reports of a potential attempted drone attack on the Energean FPSO that's in Israel's northern waters. That was not confirmed by the Israeli MOD, but from what we understand, the drones that were sent in that direction didn't even land anywhere near the vessel, which is signaling that maybe these kind of attacks really aren't having their best assets allocated towards them, or best capabilities, so to speak. But from the bigger picture, we haven't really seen the type of red flags that would signal a 4-alarm fire in the regional industry. You don't see companies pulling out their staff. You're seeing some projects certainly being delayed but not canceled. No one has pulled out of the region altogether. These things just really at the moment are not happening. I'll conclude with just a couple of signposts that I would watch for to maybe signal sort of a shift in the waters. The risk of a potentially greater escalation between Israel and Hezbollah due to Hezbollah's more advanced capabilities may present some risks. But I'd have to caveat that also by saying that any serious attack on Israeli gas production as a worst case scenario could not take place without any impact to gas flows to Egypt and to Jordan, which is certainly something that an actor like Hezbollah would have to consider if they were going to go down that route. It wouldn't just be a bilateral move against Israel. Looking a little bit to the south, any potential deterioration of the security situation in the Sinai, although I'm not suggesting that's likely, would have to be considered, certainly because this is a region that has a history of attacks on midstream infrastructure. That should certainly be on the radar, although I'm not suggesting it's likely. And then in the slightly longer term, watching what the awardees from the fourth offshore bid round end up announcing, or what kind of noise they make about their plans for exploration in Israel, would certainly be a key signpost, although they have around 3 years to decide what to do. Although it really doesn't feel like we're coming near the end of this conflict anytime soon. That is certainly something I would keep an eye on. So I will leave it there, as I've probably gone longer than I should have, and look forward to getting into the discussion.
That's excellent, Colby. Thank you so much for that sort of, as you say, signpost of risk scenarios. I'd like to turn over now to our participants. So you are most welcome to raise your hand if you would like to pose a question to our two speakers, or you can put your question in the Q&A. And Thomas Halverson is helping to manage that for us. I would just pose back to both of you, and before we get to our audience, Colby and Greg, you also mentioned, we're just not at an international market point where there's a sense of pressure. There's such plentiful supply, and a lot of that is indeed, particularly to Europe, coming from the United States, that perhaps could change if we see a new administration, I think very unlikely, that wants to restrict our ability to export, or the construction of some new terminals underway. But there's just going to be a supply glut, and that will probably increase even, 2 years from now. We'll have even more than we have right now as the Qatari expansion happens. So, the kind of risk seems very near term, if it is even a risk, as Colby describes, in sort of limited scope as well. Do you have any reaction to that? Greg, do you want to go first?
Yeah, I'll kick things off. I mean, yeah, on your first point, I mean, I don't think the significance. I think the United States is now a preeminent oil and gas exporter, and I see that it's very unlikely to change, depending on how American politics go. I mean, if you want to be blunt about it, I think the United States has two pro-fossil fuel political parties. One is just a little bit embarrassed about it. I mean, I don't think the United States is going to take a serious pivot away from exporting LNG, because it makes economic sense. It makes geopolitical sense, because one of your biggest markets is Europe, which now can no longer rely on Russian supply. As far as the market risk moving forward, I mean, I think Colby, he tagged some excellent elements here, which is not necessarily the risk to, say, shutting in Eastern Med supply or reducing Eastern Med supply, but the potential risks that Eastern Med supply may face in growing and trying to find a broader market beyond the Egypt, Israel, Jordan triangle. Trying to break into this global market might be difficult to do if we do enter a glut situation in 2025 or 2026. If you're finding difficulty breaking into markets that have any kind of upside, I mean, major developed markets are close to maxing out their gas consumption. Japan, Northeast Asia, Europe is probably going to see increased reductions in its gas consumption, although it may continue to take more LNG. It's definitely going to try to reduce its gas consumption moving forward. Obviously, North America is very, very well supplied with gas. So if you're Eastern Med and you can't break into Europe or other North Atlantic markets, where do you go? I mean, who is going to buy your gas? Even if you do get to the point where you can build up LNG export capacity, you find companies willing to invest not only in meeting regional markets, but also trying to break into a global market. That global market might be saturated, and you may not be able to make any kind of return on your investment. So those are, if we're talking about risks, Hezbollah rockets might not be the risk you're looking for. It may be glutted markets in the North Atlantic that look at your LNG and say, thanks, we're good.
Yeah, that's a good point. Colby, any thoughts?
Yeah, no, I agree with everything Greg said, and I just add to that by saying that I'll pose a quick hypothetical and say that if we end up with Egypt as the primary export route for more supply from the region, let's just hypothetically say that's the way things go for the time being. There's a price risk there. We just mentioned the U.S. a lot, but let's not forget that, of course, that Qatar has a lot of capacity coming online over the next couple of years, in addition to supply elsewhere. And historically, eGas in Egypt really does not like exporting cargoes when it can't get more than $5 per million BTU for LNG supply out of Egypt. So if we look at this supply glut potentially mid decade and maybe a period of some depressed prices there, you might have your one export avenue being governed by an authority that really would rather prefer to keep the gas at home. And you can certainly bet that the demand for it in Egypt will be there. So just adding to what Greg said, I think that's definitely a major factor that you have to consider there as well.
And if I could just hop right in real quick, just to clarify, the reason why I was only really talking about North Atlantic or European markets is precisely the reason that Colby mentioned. I mean, Eastern Med gas can't really go east because those markets are very well serviced by Qatar and by Australia, right? So if you're looking for a market for Eastern Med gas, you got to look west, beyond this, sort of regional hub. You're looking at Europe, you're looking at the Mediterranean.
And that poses a bit of a problem, right? So if we're thinking about, sort of current Israeli decision-making on how it expands its production, how it presents itself to potential investors, Colby mentioned the NewMed outreach and potential partnership with BP and ADNOC, but we also have, other operators and new expansion of these fields happening, and the construction of new pipelines. So there's a pipeline from Ashdod to Ashkelon as well, which is currently under construction, but kind of stalled because of the conflict in Gaza. And these questions, sort of political questions of domestic concerns inside of Israel, would the government even allow more product to go to other customers instead of going for domestic use? I think the next meeting is in February, where the finance and the energy ministry get together and either revise the current 45% or don't, and probably they don't. But there's where else would it go? And Egypt being a partnership that's been reliable, as you say, Colby, but also not one that's growing very quickly or very eager to expand its ability to project to East Med customers or even beyond. So is this a stalled investment environment? Because it doesn't seem that way. There are players that are hanging in despite risk. So what is their motivation? Why is there such continued interest and positioning there?
Yeah, I mean, I wouldn't underestimate the attractiveness of the resource base in the region. Again, I think there's still certainly potential there. There's undeveloped resources in Cyprus, and of course that's another kind of puzzle of its own to figure out. It was around this time last year. I think I spoke with someone from one of the Israeli operators. And at this time, when everyone was really kind of jumping up and down about the idea of East Med gas going to Europe, he was most bullish on Egypt. And I think that definitely seems like it will move ahead. You mentioned certainly there have been delays to expanding the pipeline capacity. I wouldn't overplay the potential security risks that there may be, although I think that they are there. But consider Egypt's economy as well, and that there are certainly, I think, some dangers in terms of just getting paid for the gas to begin with. I mean, they've gotten to a point where payments to oil companies operating in Egypt have really fallen into arrears again in a major way. I don't know what their foreign exchange reserve situation looks like at the exact moment, but there's definitely a danger in getting too over reliant on the Egyptian market. But I mean, this is really kind of, I think, you mentioned the continued investor interest. It's emblematic of a lot of things that seem to be sort of consistently contradictory about the East Med, and what makes it a very puzzling region, because years later we're really no closer to figuring out a solid integration of regional markets in a way that enables these exports, but people still continue to pile in. I mean, even Egypt, where the terms are less attractive than they are in Israel, continues to find takers for offshore acreage in the Mediterranean region, less so in some of the other parts of the country. But I think as long as the resource base still remains that attractive, so long as the terms are still good, questionable, like you mentioned, what will happen with export quotas, but you still by and large have an Israeli government that is hospitable to the industry. Even when the ideological composition of the government had changed somewhat, and Karine El-Harar was the energy minister, there was a pretty quick U-turn on holding the fourth offshore bid round once the war in Ukraine broke out, because I think there was a recognition of how strategically important the industry is to Israel, not just economically, but kind of on this other basis. I mean, Egypt simply can't do without Israeli gas right now. Both Egypt and Jordan would have to turn to LNG markets with the FSRUs they have if they lost access to Israeli gas, and that would be a much more expensive proposition for them. So that's a very long-winded way of saying I think that there are still plenty of things to be attracted to in this region, even if the kind of the ultimate prize that we're talking about here of consistent LNG exports is still a long way off, if it's even ultimately questionable.
Thank you, Colby. Greg, did you want to weigh in on any of those points?
No, Colby covered them brilliantly. I mean, I think he points to an apparent paradox, which is that even with all these problems or potential risks, Eastern Med is still getting bids, it's still getting attention. And I think, there's still growth there. There's still growth potential, even if it does stay regional. Egypt is a pretty sizable market, all things considered. Israel is going to continue to be a good market, right? They're going to keep needing gas. Jordan as well, though to a lesser extent. I mean, if things quiet down in the Red Sea, there's potential for links to, Saudi markets or markets in that region. So even if, the dreams of LNG exports or tapping into global demand end up coming up a little bit short, or, constructing pipelines to meet European demand, I think there is still enough to tempt companies like ADNOC and others to keep looking at Eastern Med. So it's a balance of risk and opportunity. Also, I mean, there's no, other than the money that you're putting down to lease the acreage, if you don't end up building on it, you haven't lost much. You've kept the opportunity, even if you don't end up moving forward with it. I would also say, I mean, from the Israeli point of view, holding the bids or maintaining the bids, I mean, making sure that they maintain this atmosphere of, no, this is business as usual, right? We're going to continue to develop these fields. Acknowledges two things. One, that the crisis in Gaza, or crisis more generally, is going to continue for a while, right? And business has to continue. And also precisely what Colby mentioned. This gas is incredibly important to Israel. It's very, very important to Israel's relationships with Jordan and Egypt. And it's going to continue to be. And that's not a link that can be easily disrupted or changed.
All right, it looks like we have now a question from our participants, our audience. Thomas Pickering has his hand up. So please go ahead.
Thank you very much. Can you hear me?
Yes, we can.
Yeah, Tom Pickering, former State Department. I have a clear sense that gas is the last resort in terms of meeting the exigencies of climate change of the fossil fuel province. What do you see ahead in renewables in the East Mediterranean Gulf region, given the certainties of sunlight and the potentials of wind energy? And is there the beginning of some kind of joint cooperative effort to dominate that issue as much as they have dominated fossil fuel energy province in the period up till now? And does that spell some kind of quietus for the gas production, transportation, and selling that obviously is the fundamental for Israel and for the rest of the region in terms of economic viability?
Thank you. Good question. And we've talked a little bit about sort of, gas used to be thought of as the transition fuel within the energy transition. But as both of you have noted, we're seeing such an uptick in investments into renewable energy lately. Who's still building gas power plants? Where's the demand? What do you react to that, Colby?
Yeah, I mean, I'd say I think certainly we continue to see a lot of the investment in renewables. Israel has certainly put a lot of investment into that. So has Egypt. Although I think on the Egyptian side, it's maybe a little bit more questionable how many of the great big project announcements we see actually materialize. But what I would say in terms of how this goes is that one, gas and renewables complement each other fairly well in terms of the ability to both diversify supply, but also to respond to some of the intermittency issues that still exist with renewables. Gas has a quick ability to respond to that. It certainly is something that would be beneficial in Egypt, since they are so over reliant on gas in their power sector, and they don't really have a short-term alternative. But I mean, when we talk about growing a lot of the renewable power potential in the region and kind of tapping into that, I think the important thing to remember about this as an industry is that the idea of exploiting the solar potential in the MENA region is that it's a very low cost way of producing electrons, and you cannot do all the same things with electrons that you can do with hydrocarbon molecules. In other words, don't just think of natural gas as a way of generating power. It has so many other uses as well. It goes into petrochemicals. It goes into different industries. So I would just caution against thinking that because the region has this enormous solar and to a lesser extent wind potential, that it represents this kind of equal replacement of the existing kind of benefits that come from the oil and gas industry.
Yeah, go ahead, Greg.
Sure. Yeah, Colby answered that question perfectly. I would just add a couple points. One, there's obviously tremendous interest in building up renewable capacity in the region. It takes a slightly different set of tools, and it takes a slightly different set of foreign capital agents to make that happen. And fossil fuel companies are the ones who are putting up the bids and are showing the interest and are putting up the money. So that's part of the reason. And precisely as Colby mentioned, you can do a lot with fossil fuels. You can do a lot with hydrocarbons that you can't necessarily do with the power that you're generating from solar and wind. One aspect, though, that you will need power for is for the electrification of transportation, for the potential electrification of heat. Israel and Egypt either do have or will have net zero commitments that they will have to meet at some point, and increased renewable capacity will play a role in that. But as with what Colby said, gas and solar wind complement each other very well as far as maintaining a stable grid, as far as overcoming intermittency, making sure that you have not just a cleaner energy, but also reliable energy. And given that the gas is so abundant in the region, It's cheap, it's easy to get, and it makes sense from an energy security standpoint. So I would imagine, even if, again, they don't necessarily have tremendous success accessing global markets, continuing to rely on gas to a considerable degree to meet local power, local energy demand is something it's not going to change. And that's reflective in other markets as well. I mean, even if gas isn't the transition fuel, it's still one that is likely to continue to make up a considerable portion of global energy demand for the next 30, 40, 50 years. You know, even if we do see peak oil demand, even if we see peak coal, as we're likely to see, gas is likely going to stick around longer, given its significance to so many countries' energy mixes.
Yeah, I would agree with both of you on that. There's one country we haven't talked about, and it is sort of in this paradox of continued investment, and that's Lebanon. And so we are seeing, visits from Special Envoy Amos Hochstein in Beirut this week, concerns about demarcation of the border and perhaps a new round of concessions in the offshore of Lebanon, despite not really having any successful discoveries in early attempts. So, any thoughts from both of you on sort of the Lebanese gas outlook and trouble on those demarcation issues?
I can jump in first quickly and then let Colby respond. I mean, the geology is very similar, but the political circumstances couldn't be more different, right? I mean, in Israel, you have fairly stable government, you've got good governance, you've got strong institutions, you've got partners with whom you can do business, you have a pretty reliable energy ministry. A lot of those things aren't present in Lebanon. So if you're, foreign capital, if you're coming in to develop an offshore find and you're looking at Israel versus Lebanon, I mean, it's not a tremendously difficult decision to make as far as security of investment long term. You're going to likely service similar markets. The Lebanese market's not huge, I mean, compared to Israel or Egypt. So that's a fairly easy decision to make. Geopolitically, the United States has tremendous interest in trying to develop an indigenous offshore Lebanese gas industry because it helps U.S. foreign policy. It helps support the Lebanese government. It maybe strengthens Beirut a little bit vis-a-vis Hezbollah. These are all things that drove the U.S. Move last year to establish the maritime border. So that's not going to change, I don't think. You know, even with a potential change in administration, I think this is still something that the United States is going to be interested in doing. Whether it has success bringing in private capital or say capital from NOCs or what have you, you know, given the uncertainties generally swirling around Eastern Med and given all the factors that we've pointed to as far as future demand growth or future market access, it's a tough sell. Lebanese gas is a tough sell compared to, say, Egypt or Israel.
Absolutely. Colby, any thoughts there?
Yeah, not a ton to add. I mean, I think Greg hit the nail on the head. I mean, saying that you're really one of your primary issues in operating. Say for the sake of argument, there were a successful, commercially viable discovery in Lebanon. Governance is still your main issue. Even if operating conditions in the region elsewhere might be frustrating in a place like, for say Egypt, for example, you're at least dealing with a government that is still ostensibly one entity. You really don't have that in Lebanon. In terms of what a domestic gas resource would do for Lebanon, the benefits would certainly be extraordinary. I just don't know that the incentives to kind of overcome the hurdles to developing a commercially viable discovery, again, assuming there even would be one, are there. So that's just something that is an extremely difficult proposition. I don't really, I agree. I mean, I don't really see much going on with the demarcation. I mean, even Netanyahu was initially opposed to that before it was agreed, and once the ink was dry, he kind of went quiet on that. So I don't really know that I see that as kind of being at the top of anybody's list at the moment, which is I think is certainly a good thing. The only thing I would say is that there might still be some kind of pie in the sky thinking about a more regional integration that sees pipeline flows to Europe, which personally I think is kind of a fantasy, but that still seems to be alive in certain corners of the policy community. So that might be motivating some of the movement on Lebanon, but I couldn't say that for certain.
Thank you both. If we have any more questions from our audience, please feel free to weigh in by raising your hand or putting it in the chat. And I will just share now just a map if anyone might need a little bit of a point of reference. This is from Mies, just to give you a bit of the kind of bigger picture of where we see different operators, Chevron across, of course, they're in the navy blue. And then we've got our sort of pipeline, and we didn't talk a little bit about the Arab gas pipeline, which has been incredibly reliable despite tensions between Israel and its neighbors, Egypt and Jordan. And then you see, of course, the Karish field is the lesser of production, Tamar and Leviathan being about the same in terms of production volume. And then Aphrodite, which is the Cyprus concern. So those of you who are not familiar with sort of the geography there, this is what we've been talking about. And then the processing, of course, happens more in terms of terminal facilities off the coast of Egypt, and then the Israeli talks of perhaps creating some floating terminals to be able to increase their capacity and bypass going through Egypt. So I'll stop there. Anyone else want to raise a hand? Pose a question, technical or non-technical, to our two excellent experts today? Looks like everyone's shy. Well, I will then close out there. This has been very, very informative, and I am just grateful to both Colby Connelly and Greg Brew for their time and their expertise this morning. And thank you also to MEI for holding this briefing series. And I hope that we can add more on the energy and economic lens to these in the future. So thank you all so much.